Hello and welcome back to Volatility 411. I'm Kevin Davitt and it's Monday, March 29th. Now, last week was generally positive for U.S. equity markets, but the small caps have been lagging since mid-March. The VIX Index finished last week below 19, and 1 month at the money SPX option vol closed on a 14.2 implied volatility. So broadly speaking, volatility has been normalizing for months, but the VIX futures continue to price in the potential for greater than normal volatility in the future. As has been pointed out countless times, the middle and back of the VIX term structure remains elevated relative to a sub-20 VIX. Here and now, the VIX index is not sub-20. In fact, it's measuring 2140, up about 2.5 on the day. The S&P 500 is down about 25 handles as concerns over losses from a hedge fund roil the financials. Rumors are swirling about forced liquidation stemming from a handful of names that have made big moves lower of late. Credit Suisse and Nomura may have some exposure, but the scope of the issue remains unclear. It's probably not the last you'll hear of it. Moving on, the U.S. 10-year yield remains slightly below 170. Ahead of Wednesday's ADP report and Friday's non-farm payroll data. Expectations call for an add of roughly 650,000 jobs last month. Now, if that happens, it would be the largest add since the October data. Recent headline jobs numbers haven't exactly been super strong. On the coronavirus front, it's somewhat concerning to see new case data tick higher after improving for much of 2021. Hopefully that trend is quickly reversed. Last week had multiple record days for vaccinations administered, including one in my arm. Science is incredible. Finally, keep in mind that equities will be closed this Friday for the Good Friday holiday. Also worth noting that Wednesday is the end of Q1 and there's the potential for some volatility in advance of that. That's Volatility 411. Thank you very much for tuning in.